Let's start off with the hand-wringing over the yield curve once again. I don't know what that's a harbinger of. Either it's the biggest signal that maybe this market's about to really go down, or maybe it's that contrarian signal that we're all just way too worried.
Well, I'll be honest, I was one of the many who believed that when the yield curve inverted over a year ago, almost 2 years ago, that we would get a recession. And it's been a very reliable indicator, but we haven't seen it yet. And so the fact that it's going back to a sort of a regular slope, I think it's a natural reaction when the market's pricing so many Fed rate cuts. I personally think the market's getting a little too carried away, as usual. The Fed has been wrong about the Fed this entire cycle.
Right.
They're pricing anywhere between 100 plus basis points by year end.
You think that's too aggressive?
Absolutely.
By the market. But what about, I mean, just look at it from a relative standpoint, because there's been a lot of hay made about the moves that we're seeing in the yield curve, the moves that we're seeing in currencies, at least relative to currencies like the yen, et cetera. That it's that differential between what we're seeing in Europe, rates coming down, a big rate cut in Canada this week, and yet here we are with the Fed, still, at least right now, still standing where it stands.
That's right. And you know, the Fed is always going to get second guessed, but I think under Chair Powell, it's always been a very cautious, reactive sort of process, and it's no surprise that they're maintaining that. The good news is that when they need to cut or hike, they do it aggressively. So it's in a sense reactive, but once they see the reason to go, they'll do it. So again, I go back to this though. You know, the jobs data has, you know, I think Mr. Bostic, the Atlanta Fed president, earlier today said something along the lines of, well, the labor market is weakening, but it's not weak.
Right.
I have to agree with that. That's what the Fed wants. We need a little slowing down.
We're slowing. We're not like falling off a cliff.
Yes.
So do the numbers that we're getting justify then consistent 25 basis point hikes? And you think that 50 is definitely off the table? In which case, how much can we continue to see that bull flattener?
Okay, why don't you call me on Friday at 8:31, and that'll be a more definitive answer. Look, right now it's between 25 and 50. We know 25 is teed up. And it's really going to depend, I think, on the jobs data. ADP tomorrow will be a sort of a hint, but it's not always a great, reliable indicator. I don't like to put that much weight on any one sort of data point, but given that we're going into a Fed meeting, FOMC meeting, that is a very important one for what they do this meeting. It's just been very, to me, besides Powell, and Powell was very dovish at Jackson Hole, but besides him, every other, except for maybe Goolsbee, every other Fed official has been very cautious about gradual, cautious. And so they really are going on a very data-dependent approach.
And they're still worried about inflation. They've made that, a lot of Fed officials have made that really clear. They want to be clear on that. Dollar yen. If we continue to see sort of that yield curve disinvert, what happens to the dollar, aka what happens to the yen, and then the carry trade fall off?
Well, I think a big part of that is what's going on with the Bank of Japan. I mean, that was sort of the big sort of game changer back at the end of July, July 31st. They delivered a surprise cut, and hike. I say cut because
everyone else is cutting.
The bank hiking right now, basically. But they surprised with the hike, and it was a little bit larger than expected. Now, look, you know, you kind of say, oh, it's only 15, 20 basis points. So what does that really matter? But it's sort of that inflection point where markets say, well, okay, gee, things are changing. So we've had this inflection point between the U.S. cutting, Japan hiking. What's interesting to me is that the Bank of Japan came out afterwards and said, look, with that whole market meltdown that was triggered, they tried to blame the Fed, but it was really, I think a lot of it was really them, what they did in Japan. They said, look, we're going to stay calm. We're probably not going to do anything until markets calm down. So to me, I think that's sort of a very dovish signal.
Yeah.
If you look at your great swaps market, MIPR, they're showing only anywhere between 20 and 25 basis points of tightening over 12 months, which is really nothing. That may change as the data changes, but right now it's to me a very dovish take on the
But what are traders really trying to price in? I'm talking about with regards to the yen. I mean, I know today we saw a 1% strengthening in the yen versus the dollar. We saw the same thing yesterday. Something's going on there.
Yeah.
Now, whether they're right, I mean, that's a whole other debate, but what are they trying to price in?
Well, I think this week, much of it is the safe haven flows, and we had some real risk off with the NVIDIA meltdown, and it really went across all markets. Commodities were down yesterday. Yeah. Today it's a little calmer, which is I'm kind of heartened because I don't think it's time to press the panic button. But you know, we've seen these bouts of volatility. It tells me that we really are in this sort of inflection point. You know, everyone's trying to figure out what the Fed is doing. Everyone's trying to figure out if the U.S. is going into recession.
You expect this volatility to continue, though?
Absolutely. I think this will continue well into year end. There's so many moving parts. You add in some geopolitical risk. You've got China in the background. It's just a lot of stuff for markets to digest. But yes, I think, say this Friday and then on September 18th, the Fed, that'll clear some things up. Yeah. But it really is so data dependent that even when the Fed goes 25 or 50, we still don't know what's coming down the road. I still think if you look even further ahead, there's about over 200 basis points of easing priced in for the Fed over the next 12 months.
Right.
Again, if that to me is like a recession pricing.
Yeah.
And I go back to this, the economy is weakening, but it's not weak. We're growing about 2.5% this quarter.